Welcome to Markets Now. I'm Michelle Rook with Spotted Farmers Trading Company. Well, livestock out of the plus side today. Grain trade was lower except for wheat. Soybeans kind of led the price charge down. Vince, let's talk about that market because, did we just see some profit taking today, or was this kind of tied to South America?
I think there's lots of things, Michelle. And you saw a forecast in Argentina that went from 2 weeks of hot and dry to just a week. We have stories of basis continuing to widen in Brazil with harvest, which really is not indicative of a really short crop. Brazilian beans over $2 cheaper than the U.S. I think all of that added up and getting to some resistance around 12.52 in that March contract. All had some longs heading to the sidelines and maybe even some shorts coming in and doing a little hedging.
So we hit some chart resistance there. Is that also what happened in meal and oil because the products were also down?
I would guess so, and it's not real often you see all three of them go the same direction, but just a lot of news. And we did come in on the export sales, weekly export sales on Thursday morning, not a big number again, and we're getting past that window where we're going to do a lot of business in here, so you would have liked to saw that a bit higher, maybe closer to 1 million metric tons versus 600,000.
Yeah, those weekly exports were actually a little dismal. What about the corn market? Corn also down for the day. Did we just hit some chart resistance there as well? Or are we seeing the corn market, did it follow soybeans today?
I think it followed the beans a little bit, but again, over 450 to 460 is probably going to be somewhat of a tough road to get through in here. We've heard some people talking around here, ethanol plants are lined up with trucks, and I think it's that time of year that producers need some money. The price isn't what it was last year, and they got to generate cash flow, so that's not helping it either, I'm guessing.
Yeah, no doubt. A wheat market was on its own to the plus side today, despite the fact that you had the dollar index higher, which should have been, price inducive. But what do you think was driving the wheat market today?
You have to wonder if it wasn't some spreading between Chicago and Kansas City. We've seen a lot of that this week, and maybe they're just unwinding some spreads they put on earlier. We did not see any fresh news out there that would say Kansas City wheat needed to be higher.
No doubt. What are we thinking in terms of the debate now between lower acres versus maybe a better crop than last year? What's the mentality of this market in terms of crop size, I think, going forward?
I think if you look at the producer in general, there's a lack of enthusiasm, disappointed that, why didn't they just sell everything at harvest time versus storing it? But that's not what they normally do. Acres, are we going to get a bid for acres? We usually do. I'm not sure if that's really necessary with the current stocks we have. Yes, bean stocks are a little tight, but if Brazil comes through decently and Argentina should, the way it looks, we shouldn't have a lot of world problems. But again, I think the last couple of days somewhat indicative. If you've got some weather problems, there's going to be some buyers at least short term and giving you some opportunities.
Yeah, and exports weren't a big runaway this morning either for wheat, were they?
No, wheat was okay, but everything else was dismal.
Yeah. What about the cattle market? So new highs for the move here today in both the live cattle and the feeder cattle futures. Is the fund community kind of pushing that, or was this all about this higher cash trade we saw today?
I'm sure there's some fund in here, but all day they were weaker to start with and came back, and they kept buying and selling with really little change most of the day. And then when you took off around noon today, one had to suspect it was higher cash that was driving it on that fed cattle side. And some people that we talked to were getting bid 177 in the north, and packers may be talking they may need to go to 180 to get them bought because they were pretty tight-fisted on letting anything go.
I think we stopped just short of like a 50% retracement level today in both live and feeder cattle futures on the most actively traded months. So if we get above that, will that bring that fund community back in here like they were maybe in September of last year?
I think it's possible. Last week, it started feeling better, like there was more confidence coming into the market. You had to have a reason to push it. Some of our work would tell us that we would think this should come back at least 70% of what it went down, which is a few more bucks in here yet, and nice to see. But fund coming in, not out of the question. I would think they do short term.
Yeah, exports were better this morning. Monthly cold storage report wasn't terribly burdensome, so I think did that help too?
It did. You looked at all of both of those numbers, whether it be the cold storage or the export sales, which was exceptional at 20 over 22,000. We haven't seen that for a while, but it really didn't seem to make a lot of difference on the market. You probably add that in as a positive when they came back in and started buying on the higher cash, and then some of those investors or maybe some people that were short said, "Let's get out of this thing. It looks much better than it did earlier."
You bet. Hog market also higher, making new highs for the move. April looks like we've had a chart breakout. Are we following cattle, or is there something else that's pushing that market?
They're on the same road, I think, but I think more so. I think hogs are really on their own. We've had some burdensome numbers. Uh, as we get down the road another month or so, they should start lightening up. I did read some things yesterday that would indicate maybe it's going to be quicker than some of the people thought in there. Again, look at the cold storage report. We did see pork down 6.4% year on year and 9.3% as of the average for the 5 years, even though we're 2% higher from November. The build, especially in the bellies, was not near as big as the trade thought it would be. And that probably was a spark in there also.
We've also been hearing news, Vince, that China is going to kind of encourage their farmers to get some liquidation done of that big herd that they have over there. Is that the spark as well?
I'm not sure. I think you look at that, maybe some people are going to look at it and say down the road that maybe means we're going to get some more export business, and maybe we do. But with record numbers of sows in what they have right now, they really need to get rid of that and then see where the demand is. You look at the other part of that you may want to take into consideration was China dropping its interest rates a bit, and also the reserves that the bank had to have on hand. I think the numbers I looked at on that side would have put $136 billion added into the economy that they could loan out.
Yeah, I think that was a spark for the market yesterday in some degree as well. One final question. Okay, we got GDP numbers out this morning. They were a little bit above expectations. It looks like, is the dollar reacting to that? Is that why we were so much higher on the dollar
I
today?
got to believe that's part of it. Yes, in like we've seen for several months, you get some reports that are positive, some negative, but all in all, it looks like it's clicking pretty good in here. And I think that GDP is a good indication that we're maybe not quite as bad as some people want to make you believe.
I think you're right. All right, thanks for joining us, Vince Boddicker, Farmers Trading Company. That's Markets Now.